Morning. Steve Fried with the Morning Grain Comment. Got a mixed trade overnight. The nearby corn and soybean markets are firming, and meal is gaining on soybean oil. Wheat is lower, especially in Minneapolis. As far as the news overnight, I think initially there was some follow-through selling, especially in the new crop D's corn, because of a private guess last week of 96 million corn acres planted versus USDA's 91. I mean, that 5 million acres more would equivalent to about 25 million metric tons of Chinese imports, and probably would suggest that the U.S. corn carryout could be as high as $1.5 billion. Prior to that number, a lot of people thought that with the lower Brazil corn crop and the fact that U.S. exports could be higher, we could actually see a corn carryout closer to 1 billion bushels. So that was a kind of a big deal for the managed funds to liquidate positions rather rapidly. I think the nearby corn and beans are still supportive by the fact that domestic demand and even export demand for corn is going to tighten the 2021 balance sheet, and that market probably needs to do some rationing of demand, or at least moving grain around from where it is to where it's needed. As far as the wheat market is concerned, we're going to see some good rains across the southern plains. Actually, too much rain probably in East Texas. But we also put some rain in the forecast for the northern plains for over the next 7 days. And so I think that's much needed timely rain for both hard red spring and hard red winter wheat. And the soft red winter wheat crop was already rated above average. So a combination of world wheat prices lower than U.S., a combination that our export prices are not competitive, and now these rains is weighing on the wheat market. Key factor down the road, now that we know what the USDA 21-22 S&Ds are, is number one, what will our actual acres be? Number two, what the weather is going to be, and then what the final yield is going to be. As tight as it is, we need that 180 corn yield and 51 bean yield to satisfy demand and allow carryouts to increase from where they are this year. Outside markets, we've got the stock market lower and the dollar lower. Crude's about unchanged, but there is talk that crude prices might go up on demand. Soybean oil is losing ground because palm oil is lower because of concern about lower demand. Their stocks came out higher than expected in their latest report. Also, we'll be watching Washington pretty closely as far as increased debt, how that could offer weakness to the dollar. And also infrastructure bill, if passed, could increase debt and be weaker on the dollar. And we'll be watching any hint of inflation. Right now, the U.S. Fed is talking about keeping the interest rates low and being accommodating. That should be supportive to the stock market. As always, these are my thoughts and not those of ADM, or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.